Hi everyone. The tax-free savings account is an account, a registered account, that the government introduced in 2009. It incentivizes Canadians to save and grow their money. The incentive is that all the money that you make in this account will be tax-free. It is, in my opinion, the best general investing account for beginner investors because you don't have to deal with the taxes. I'm going to talk about everything you need to know, general rules and benefits, the contribution rules, the withdrawal rules, and some common misconceptions. Let's get into it. So like I said previously, all the profits you make in this account is tax-free. So if you put $10,000 into this TFSA and you buy stocks and ETFs and those investments grow to $40,000, the $30,000 you make is tax-free. Obviously, making money tax-free is so valuable, and that's why there is a contribution limit. Contribution meaning the amount of money you put in this account is limited. You can't just put $1 million in your TFSA and make money on that. So let's talk about contributions. The amount of money you're allowed to put in your TFSA is different for everybody. The TFSA program was launched in 2009, and your contribution limit will depend on whether you started living in Canada in 2010. Also depends on the year that you turn 18. Your TFSA contribution room starts the year you turn 18, and your TFSA contribution room accumulates every year after that. I will link a TFSA Contribution Room Calculator down below. It'll ask you 5 questions and calculate your contribution room for you. For an example, I was born in 1998, so my contribution room for this year, 2023, is $47,000, assuming that I've never contributed to my TFSA before. If you were born in 1990, your contribution room would be $88,000, assuming that you've never contributed to your TFSA before. I will insert how the TFSA contribution room is calculated from the CRA website. How to know your TFSA contribution room. The TFSA contribution room is a total of all the following: the TFSA dollar amount of the current year, any unused TFSA contribution room from previous years, any withdrawals made from the TFSA in the previous year. Let's go through this one by one. The TFSA dollar limit of the current year. So like I said, I was born in 1998, so my TFSA contribution limit for the current year, 2023, is $47,000. Now every year on January 1st, the government allows everybody to put more money into their TFSA. So they increase the contribution room for everybody. How much more money you're allowed to put in your contribution room every year is determined by the government the previous year. So the government just announced that the contribution room increase will be $7,000 for everybody in 2024. So whatever your personal limit is, add $7,000 on top of that. So mine would be $54,000. 47,000 plus 7,000. If you were born in 1990 and your limit is 88,000, add another 7,000, making it 95,000. Any unused TFSA contribution room from previous years. So again, if my contribution room is 47,000 and I put $30,000 in my TFSA this year, my unused contribution room would be 17,000. That unused $17,000 doesn't just go away. It gets carried on to the next year. So in 2024, my contribution room will consist of the unused contribution room of $17,000 from 2023, plus the additional $7,000 new annual contribution room, making my total contribution room for 2024 $24,000. Here's a frequently asked question. If I put $30,000 in my TFSA and my investments grow to $40,000, does that $10,000 growth count as a contribution? The answer is no. If you put $30,000 in your TFSA and it grows to $40,000, you're still allowed to put the $24,000 in your TFSA the next year. Growth does not count as contributions. And any withdrawals made from the TFSA in the previous year. So let's start from scratch. My TFSA contribution room is $47,000 in the year 2023. I contributed $30,000 this year. Let's say I withdrew $10,000 from my TFSA in the same year in 2023. My contribution room for 2024 would be the TFSA dollar limit of the current year, so the $7,000 contribution room that the government sets, plus any unused TFSA contribution room from previous years, which is $17,000 because I contributed $30,000 in 2023, plus any withdrawals made from the TFSA in the previous year, which is the $10,000, which gives us a contribution room of $34,000 in 2024. So although I withdrew $10,000 in 2023, technically I still contributed a total of $30,000 in 2023. Just because I withdrew $10,000 from the $30,000 that I contributed, it doesn't mean that my contributions for 2023 decreases because I withdrew. I still contributed $30,000. Any withdrawals you make, that contribution room will come back next year. but it still counts as a contribution in the current year. So let's talk about withdrawals. Let's give an extreme example. Starting from scratch again, my contribution limit is $47,000 in 2023. Let's say right at the beginning of 2023, in January, I contributed $40,000 to my TFSA. So what's left of my contribution room is $7,000 for the rest of the year. Let's say I decide to buy a car, or for whatever reason, I need to withdraw $40,000 from my TFSA. When I withdraw the $40,000, for the rest of the year, I'm still only allowed to contribute $7,000. It only resets January 1st of the next year. So even if, let's say I put $47,000 right at the beginning in January and I withdrew it, that means I have no contribution room at all for the rest of that year. So everything is calculated from January 1st to January 1st. But you guys, something worse can happen. Let's say I contributed $47,000 and I bought stocks and ETFs with the $47,000 and the value of my investments dropped to $30,000. And again, for whatever reason, I really need the $30,000 and I sell all my investments and withdraw that money from my TFSA. I would lose that $17,000 contribution room forever. So next year, I wouldn't be able to get $47,000 contribution room back. I would only get $30,000 back. So definitely think twice before buying that meme stock, because you can lose your contribution room forever and you can have less contribution room than your peers. But the opposite can happen. If you deposited the full $40,000 and you invested that money and it grew to $100,000 and you withdraw, you can contribute the full $100,000 plus the annual increase that the government gives. Let's talk about some common misconceptions around the TFSA. First of all, the name is super misleading. It should be called the tax-free investment account, not the tax-free savings account. So many people think that they can transfer their money into their TFSA and it would grow. But this is actually worse than saving your money in a traditional savings account, because at least a traditional savings account would give you 0.01% in interest. But if you do have money to put in a savings account, make sure it's a high interest savings account, not a traditional one. I do have a video all about high interest savings accounts. I'll link that below. Honestly, the easiest form of passive income. Anyway, when you put money into a tax-free savings account, you actually have to use that money to go and buy stocks, ETFs, bonds, whatever. What actually grows your money is the stocks and ETFs that you hold in the account. Some people use their tax-free savings accounts to hold their emergency fund. I mean, just like I mentioned before, you do have limited contribution room in your TFSA and you really do want to use that money to grow your money. And there's also rules with withdrawing that money, like I mentioned before. These ones aren't misconceptions, but they are FAQs that I get in my TikTok and Instagram accounts. Again, capital gains and dividends do not count as contributions to your TFSA. So again, if you deposited $30,000 and it grows to $40,000, that $10,000 growth does not count as contributions. Same as dividends, and dividends are what a company pays you just for buying and holding their stock. I get paid in dividends every single month, but again, that does not count as contributions. If you hold a US dividend paying stock, that US dividend that you receive every month is actually not tax-free. There is a 15% withholding tax on those dividends. But what happens is that the companies that pay you those dividends already take the 15% withholding tax before it hits your TFSA, so there's nothing extra you need to do in regards to taxes. That 15% withholding tax stops a lot of people from investing in US dividend paying stocks, but personally, I would rather get the dividends and the growth and pay the taxes than not make the money at all. I think that's everything you need to know about the TFSA for beginners anyway. Let me know if I missed anything.